Here's a hard truth. If you can't build $100,000 from scratch, you'll never build real wealth. The good news, it's way simpler than you think. In this video, I'll walk you through the exact steps to turn small, consistent investments into a six-figure portfolio. Reaching $100,000 is the ultimate milestone. It's not just a number on a screen. It's the point where your money starts doing the heavy lifting for you. It means you've built a serious base that can generate real passive income, compound on its own, and unlock financial possibilities you never thought were in reach. Most people never get there, not because they're unlucky or don't earn enough, but because they lack a clear strategy and the discipline to stick with it. This is where you separate yourself from the pack. So, how do we make this happen? Let's talk numbers, but without the Wall Street jargon. Historically, the U.S. stock market, tracked by the S&P 500, has delivered average annual returns of around 10% over the long haul, before you account for inflation. But let's get even more specific. If you look at the last 15 years, the S&P 500 has returned a staggering 495% with dividends reinvested. Do the math, and that works out to an annualized return of about 12.6%. Now, past performance isn't a guarantee of future results. Markets are unpredictable, so for our plan, we'll be conservative. Let's dial back our expectations to a more realistic 7 to 10% average annual return. Using this range, we'll build a simple model, investing a set amount, like $500, every single month. With this strategy, you won't just hit $100,000, you'll blow past it in about a decade. Here's the plan in action. If you invest just $500 every month and manage to earn an average annual return of 8%, you will cross the $100,000 mark in roughly 12 years. Don't stop there. If you keep that same consistency for 15 years, your portfolio could surge past $140,000, all depending on market performance. The secret weapon here is a concept called dollar cost averaging. This just means you invest the same amount on the same day every month. Whether the market is soaring or sinking, this forces you to buy more shares when prices are low and fewer when they're high. Smoothing out your average cost over time, the key is to automate your investments, set it and forget it. This removes emotion and ensures you never miss a contribution. And finally, every time you get paid a dividend, reinvest it right back into your portfolio. That's how you let compounding work its magic while you live your life. Now, where do you put that money? Don't make the rookie mistake of betting your entire future on one hyped-up stock. The smart play is diversification, and the easiest way to achieve that is through ETFs or index funds. Your portfolio should be built like a fortress. The core of it, maybe 60 to 70%, should be in a broad U.S. equity index fund that tracks the entire market. This is your foundation. Then, add some international exposure to tap into global growth. The rest can be your satellite position, smaller bets on specific sectors you believe in, like technology or healthcare, or even dividend-focused funds for extra income. As your portfolio grows, you'll need to rebalance it once or twice a year to maintain your target allocations. Most importantly, keep an eye on fees. High fees are a silent killer of returns. They create a drag on your compounding engine that can cost you tens of thousands over the long run. Let's be real, the market will drop. There will be crashes, corrections, and periods of gut-wrenching volatility. It's not a matter of if, but when. This is the moment that defines your success as an investor. While everyone else is panicking and selling at the bottom, you stay the course. These downturns are actually a massive opportunity if you're consistently investing. Your automated contributions are now buying assets at a huge discount. Instead of trying to time the market, a fool's errand, do focus on time in the market. That's what truly matters. Rebalancing during a downturn can be a powerful move, allowing you to sell some assets that have held up well to buy more of what's been beaten down. And if life gets in the way and you have to skip a month or two, don't quit. Just pick it right back up where you left off. Consistency over perfection is the name of the game. What if you're ambitious and want to hit that $100,000 goal even faster? The plan is simple. Pour more fuel on the fire as your income grows. Increase your monthly contributions. Got a year-end bonus or a tax refund? Don't spend it, invest it. A one-time lump sum can shave years off your timeline. You can also explore higher growth opportunities with a small portion of your portfolio, but do so with caution and research. The single most powerful accelerator, however, is using tax-advantaged accounts. Whether it's a 401k, a Roth IRA, or whatever equivalent your country offers, These accounts allow your money to grow tax-free or tax-deferred, keeping more of your hard-earned gains in your pocket and out of the taxman's. So there you have it, a clear, actionable path to a six-figure portfolio using nothing more than consistent monthly investing, smart allocation, and a healthy dose of patience. You don't need to be a stock-picking genius or have a secret inside connection. You just need discipline and a belief in the power of compounding. The only question left is, will you commit to starting today, or will you spend the next decade wishing you had? Drop a yes in the comments, and if you want, I'll send you a free 12-month tracker sheet so you never lose your way. Remember, this is not financial advice. Always do your own research before making any investment decisions.